Enterprise Product Partner Stock, ticker symbol EPD. This stock got a lot of attention lately in my Discord channel, but also on different YouTube channels, so it was about time to analyze this company. EPD stock is up almost 10% year to date and has gone up and down quite a bit so far. On the 1st of August, EPD presented quarter results where they missed on EPS and revenue. But the revenue part is what worries me a bit. The reason why people love EPD so much is because of the dividends, and I get why. Dividend yield is at 7.5% and 24 years of dividend increases. So could this be the perfect moment to buy EPD stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does EPD do? Enterprise Product Partners transports and processes natural gas liquids, crude oil, refined products and petrochemicals. It is one of the largest midstream companies, with operations servicing most producing regions in the lower 48 states. As showed earlier in this video, EPD missed on earnings, which is something that I don't like, of course. But with gas companies we should pay more attention to the free cash flow. And this looks pretty interesting with 86% adjusted free cash flow payout ratio. In here we see the 2023 outlook. It is expected that growth capital expenditures will be in the range of 2.4 to 2.8 billion. In 2024 it is expected to be in a range of 2 to 2.5 billion. They are also planning to protect the balance sheet with a leverage ratio target of 3 times. Liquidity is at 4 billion. EPD introduced a buyback program in 2019, which is something that I really like. They bought back 2.9 common units during the second quarter of 2023. Free cash flow payout ratio is at 86%, which is fine by me, since this company is really focusing on the dividends. And now that we know a little bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. EPD is a 57 billion market cap company, making them one of the larger gas companies in the US. PE ratio is at 10, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for EPD stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 52 billion and in this graph we see that revenue went up and down like a roller coaster. As said earlier in this video, it is of course important to pay attention to the revenue. But this pattern doesn't worry me that much, to be honest. Look up any competitor and you will probably see a similar pattern. Margins are going up in the long run, and to me this looks really good. It was coming down a bit since 2021, but right now it is increasing again, which is something that I really like. EPS did increase in the long run, and it is pretty similar to the margins. To me this looks really good. Analysis expect mid-single digit growth in EPS in 2024 and 2025, but after this it is expected to have a difficult time. For the revenue it is a pretty similar pattern, but the only difference is that for the revenue they expect some short-term problems in 2023. Return on assets is sitting at 6.1%, which is a decent number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 7.7%, which is again a decent number. Unfortunately, it is lower than the 5-year average, so that is something to keep your eye on. Current ratio is at 0.93, which looks pretty good to me. Over a longer period of time it is really steady, which is also very nice. Right now EPD has almost 29 billion in debt. To me it is very important that companies can pay down a big chunk of their total debt. Right now EPD has 76 million in total cash, so this doesn't look good to me. However, companies like EPD have a higher debt versus regular companies, so that's something to keep in mind. But still, it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, at a somewhat steady and consistent pace. To me, this is looking really good. Shares outstanding are increasing, which is not a good thing, so this is something that I don't like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 7.5%, which is an insane number of course. Annual payout is at $2 and payout ratio is at 78%. I prefer 50% or lower, so right now they have 22% left in cash to buy back shares, pay down debt, do acquisitions and all other things. But keep in mind, companies like EPD have a higher payout ratio, so it doesn't worry me that much. The 5-year growth rate is at almost 3%, which is a decent number given the fact that it is already yielding at 7.5%. And on top of that, they increased the dividends for 24 years in a row, which is very impressive. And if you take a look at these numbers, the dividends paid since 2011, you see that EPD really likes to increase the dividends and keeping their yield very high. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that over a longer period of time, payout ratio is decreasing, but most recently it is increasing a bit, so this is something to keep your eye on. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at historical numbers, which is very nice. And overall these dividends look pretty good to me, but how about the historical returns? I decided to compare EPD stock with the overall market, in this case the S&P 500. Next to that I added Enbridge and Williams Company. On the 5-year chart we see that EPD was crushed by the S&P 500 and both competitors also did a better job. EPD returned 33% including dividends, which is half of the amount of the S&P 500 sitting at 72% including dividends. On the 1-year chart it's looking pretty different with EPD returning 11%, beating the S&P 500 by a small amount. But WMB had the highest return with almost 14%. On the 6-month chart it is WMB with the highest return again. Enbridge had the lowest return. On the 1-month chart it is WMB with the highest return again, which is very interesting. EPD and the S&P 500 are having similar returns. So bottom line, EPD was beaten by the S&P 500 and competitors in the long run. And most recently it started to create some momentum. So is this the perfect time to buy EPD stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 0, 2 and 4% based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 9, 10 and 11%, and for the free cash flow margin I'm putting in the same numbers. For the PE ratio and the price to free cash flow I'm filling in 10, 11 and 12. It is a massive company that is still capable of growing. But we are not going to see double-digit returns and the industry standard is also around this number. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now EPD stock is at $26. I hit analyze and we only see a few green numbers. We have a low price target of $17, which is a big drop from the current stock price. We have a mid price target of $23, which is still a decent drop from the current stock price. And we have a high price target of $30. To me, the mid to high price target is the most justified here, indicating that this stock is within the middle of this range. Some people will say it's undervalued and some will say it's overvalued. Whatever you are choosing, right now you are in the middle of this range, in my opinion. And when this happens, I tend to lean to the lower end, just to be sure. My final conclusion on this company is that I get why people are interested. They pay a massive dividend and it seems that dividends are safe for now, which can increase your average yield quite a bit. Of course, companies like this come with some risk, and it's very important to analyze them on a consistent basis. From a dividend point of view, I do get why you would buy this stock, but from a value point of view, I'm having a hard time. When we check the total returns including dividends, it doesn't look good on the 5-year chart. And of course, this doesn't have to mean anything for the future, but still it's something that I pay a lot of attention to. For now, I'm waiting for the stock to drop in stock price. With the price target sitting at $23 to $30, I think I might enter at 23. But of course, whenever this is going to happen, I will analyze them again. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.